Today, we're focused on the disconnect between physical progress in the field and financial reporting in accounting. Why those two don't run on the same clock, how that gap distorts the whip, and what leaders can do to bring the field and accounting back into alignment. This is the third conversation I've had with Kathe Barrington, CPA, as part of our construction accounting series. In the first two episodes, we broke down WIP reports, percent complete, and how WIP directly impacts cash flow and profitability. This episode builds on that foundation. If you've ever had a job that felt done in the field, but didn't look done in the numbers, this episode will help you in a tremendously profound way. That's a big promise, right? Let's dive right in. This is Eric Anderton, and you're listening to Construction Genius, a leadership masterclass. Thomas Edison said that genius is 1% inspiration and 99% perspiration. If you're a construction leader, you know all about the perspiration, and this show is all about the 1% inspiration that you can add to your hard work to help you to improve your leadership. On almost every construction project, there's a moment where the field says, we're way further along than the numbers show, and accounting says, no, you're not. Today, we're going to unpack why that happens and why neither side is actually wrong. Kathe, welcome back to Construction Genius. So why do timing differences between field progress and accounting progress occur?
Definitely that paper shuffle is usually that timing difference. When you think about subs and suppliers and how long it takes them to process their own payables, receivables, things like that. And then if you've got snail mail or if you've got email, depending on your internal processes, it could be 30 days before you see a physical bill, and sometimes even longer if the supplier and sub is a little bit of a mess on their end. So you've got people in the field who obviously are physically on the job and they see what's going on. And then you've got accounting, which literally just has the paper side.
Yeah, so we've got on the field, we've got physical progress. In accounting, we have financial recognition.
Exactly.
Yeah, so it's sort of like different clocks and different rules around how progress is recognized or even experienced.
Yeah.
That's interesting, though, because, guys in the field are like, dude, I'm done.
Yeah.
And people in accounting are like, I don't feel done in any way at all.
Absolutely. And that happens a lot. I mean, I would say probably 99% of the time that happens.
You know how we are as human beings. I'm done with this task and now I'm moving on. And the accounting's always calling you saying, hold on, let's go back. And that's a kind of a tough transition there, huh?
Yeah. And you also have the internal versus the actual job side of it too. So if you're a sub and you're a small piece of the job, you're running into that same situation in the job too. So I've got, people that are billing retention too early. Like
it's wheels within wheels. So what's actually happening on a job when the field progresses, but it's ahead of what accounting can recognize?
That's a difficult one because there's a few different ways that you can do it, right? If you want to make the job look more percent complete than it physically is, then you have to do a little bit more legwork to make sure that your costs are up to date, since percent complete is literally an accounting equation. If you are missing invoices from your suppliers and your subs, then you have to take the time to go get them. Or you have to take the time to figure out what you think they are and possibly accrue them separately.
So what I'm hearing is that the field is measuring physical progress, accounting is measuring financial recognition, and those two things run on different clocks.
Absolutely.
So when costs lag reality, accounting has no choice but to show less progress, even if the work is actually done.
Accounting might not even know. If there's not enough communication going on, then accounting doesn't even understand or realize that there's an issue.
Okay, so that then leads us to our next question. What causes accounting to show a job as less complete than the field sees?
Missing costs.
What typically prevents accounting from recognizing progress the field believes is complete? Is it just that billing aspect of it, just strictly speaking?
Absolutely. Yeah, it is.
Yeah. So how does that disconnect affect decisions while the job is still active?
If you don't know where you're at on your job, you're going to make bad decisions. So it really comes down to lack of communication, because you should always know where your job is, both physically and accounting, and then make decisions on how to bridge that gap.
Yeah. What is one SOP that a construction company should put in place with their field folks so that sense of that disconnect between field and office is bridged as much as possible?
Regular WIP meetings, job meetings.
So you really have to educate your foreman, you have to educate your superintendents to really understand the accounting side of it as much as possible so that they are showing up with the right information at the right times and really bird dogging that information from subs and suppliers if necessary as well. Am I hearing that right?
Right. And it really does depend too on what your structure is. If you have project managers, if you have estimators, who's involved in what. So you have to kind of build those SOPs depending on what layers you have and who's doing what.
How does accounting calculate percent complete versus operations? What's the difference there?
So the percent complete is just the amount of actual costs on your job divided by your cost budget. That's it.
Think about the last time you promoted someone into a leadership role and it failed. Why did it fail? I can tell you one reason. People know how to build projects, but they don't know how to build and lead teams of people. Construction comes with its challenges that only insiders truly understand. Generic leadership training doesn't cut it. You need a program to train your leaders built specifically for construction professionals led by an industry expert. And my online course, The Shift, is exactly that course. It has 5 modules. It'll teach your people how to control their calendars and reduce stress and embrace chaos and accomplish their critical tasks. It will teach them the 3 essential messages they have to communicate every day in order to motivate and lead their team effectively. It'll show them how to build and lead a high-performing team, give them a framework for running effective meetings so they'll be able to solve problems in less than an hour, and also give them a higher perspective on their leadership that will enable them to work on the business and on their teams and not get stuck in the weeds micromanaging. So go out to my website, theshift.constructiongenius.com, read all about the course, and then enroll yourself and your leaders in the course, and I guarantee that it will transform your leadership. If it does not, you take the whole course and you didn't get benefit from it, you just send me an email, eric@constructiongenius.com, and I will cheerfully refund you 100% of your money. I'm really confident this course will transform your leadership. So again, go out to the website, theshift.constructiongenius.com, learn more about the course, and start taking it today. So, but accounting, that's cost-based math, whereas operations is physical progress judgment. It's interesting, huh?
I mean, in their sense, yeah, it's the same thing, right? They're looking at actual progress, which would equate to cost in essence. So they're looking at that, and where the discrepancy is just the paper.
It's interesting because, again, the actual work in place is not a conceptual thing. It is what it is. It's material, whereas accounting in many cases is a concept. It's conceptual in nature, and that's why that disconnect, I think, can happen so much because of the difference between material progress and then conceptual progress.
And I think it's a failure to communicate between field and accounting and the understanding of who is looking at what and what's going on. So there definitely needs to be a level of education on the whys and the basics and who's doing what instead of pleading ignorance in that sense.
So with percent complete, do you see construction companies taking time to educate the folks in the field the difference between physical percent complete and then how accounting recognizes it? Is that education process going on, or is it just like, here's an SOP, follow the SOP, that's good enough?
In the successful companies, yes.
And I think that's really key here, right? Because you've put an SOP in place that's supposed to bridge that gap, but the gap still isn't bridged because they're not using the SOP. And the reason they don't use the SOP is they don't understand the why. And if they don't understand the why, they don't have any incentive to do the SOP other than I'm going to smack you over the head if you don't use it kind of thing. Is that right?
Yeah, exactly.
How can timing gaps, and you talked about this, distort WIP and cash flow?
So there's a few timing gaps that can distort it in different ways. The first one, obviously, is missing costs, not understanding that you're physically ahead and what to look for. And if you don't have your project managers and your foremen and superintendents and stuff as involved in the accounting month-end close process, then you might not know what you're missing. And so obviously you're not earning the revenue as quickly as you should. There's also, which is more of a rare situation, is when you have the stored materials, which actually is almost like inventory that you're storing on the job, and your job can look more complete than it is. That's very rare. Doesn't happen as much, I've noticed. A few years back, I think it happened more than it does now. But that can actually artificially make your job look like it's more complete because you've preloaded materials.
So what does that mean then for cash flow planning and forecasting?
So if you're not billing enough, it still comes down to you not having enough cash to kind of fund the job as it's going. If you're not paying attention to these things, then it will create cash flow issues down the road, because once you bill, you know that it's possibly 60 to 90 days before you're even going to get that cash. So if you're not managing the billing side, then your cash flow side in 60 to 90 days can come in and hurt you really bad.
So you've got to be super diligent on that billing side. Yeah. So where do leaders usually feel the pain first when this gets out of sync?
I would say they see it in the underbillings at first, and it could be cash flow issues already. And if you're more labor intensive, you're going to feel it a lot faster than if you're sub intensive.
Yeah. Can you describe a situation where timing distortion created a cash surprise? Can you think of one in your experience that was particularly telling?
One issue I'm dealing with right now is the over and the underbillings are about the same amount. So you've got half the jobs that are overbilled and then half the jobs that are underbilled. And what that's creating is the overbilled jobs are basically funding the underbilled jobs. And if you don't correct that, then you're going to end up with a huge cash flow issue.
Man, you could just see that, because if you're not fixing the underbilling, once you're done with all the overbilling and you've got to pay the piper, then all of a sudden there's that massive gap that occurs. So what communication breakdowns cause the biggest disconnects, do you think?
Not creating a team environment to make sure that there is good communication. It's the us versus them, and we're all here a team. We want to make this work, and we're all in for the end goal, and it's the us versus them that creates the biggest issues.
How often do you see folks in the accounting department say, okay, guys, we're going to put on our hard hats and our boots. They may be a little shiny, but we're going to go out into the field today and visit the guys and the gals out there and build relationships with them?
Rarely.
That seems like it would be a good idea.
Agreed. I think it should be, it would be amazing for the people inside the office to have regular field trips.
So here's another question in terms of the communication breakdowns. How does language or terminology contribute to misunderstanding?
Lack of speaking the same language. So if you're not speaking the same language, then somebody could be sitting there saying,
I know that happens all the time, because folks in accounting, frankly, are speaking a completely different language than folks in the field, and vice versa. So there's no wonder that there's breakdowns there. It seems like in the winter would be a great time to bring your crews in-house, sit them with accounting, and do some plain English language explanation of what these different terms mean and why they're so important.
Yes. And then also having it part of your onboarding package, part of your training package, having regular discussions about these things so you know what the terminology is really important.
Yeah. And so it really gets down in many ways to a people issue, in that we understand that there's a different language being spoken in both departments. We have to come together in order to understand both sides. And that requires taking some time and effort to train our people, but then also to build those relationships between the people in our organization.
Yes, most definitely.
What practical tools help field and accounting teams stay in sync?
To me, if they have access to reports or whatever it is, and most of the time it's going to be their job cost reports.
Okay. So give the field the job cost reports, make sure that they understand them. And I think that's another thing, right? Is like when you're training, you can always get the nodding of the heads, right? Because we all want to get out of training and get back to doing something more interesting. But then to have them teach it to you, then that can be tremendously helpful to make sure that's kind of locked in there, right?
Yeah. Yeah. And if they have a system where they can also do invoice approval routing and do those sorts of things where the project managers are a little bit more involved so they know what costs are coming in and approve them, I think that's great as well.
Are you going to get some pushback from PMs that saying, I don't want another thing to do? Or how would you going to?
Of course. Always.
Yeah.
Nobody wants more to do.
How often should cost data and field data be reconciled?
It should be looked at weekly by project managers and that sort of thing. And like if there's any errors, anything that isn't coded properly, that those corrections be made immediately. So I think there's a level of monitoring that needs to be done weekly. Some people go down to daily levels where they've got timesheet data that they're looking at daily to see how much labor's been on the job, those sorts of things. If you're very labor intensive, then I would expect you to be watching your labor pretty closely because you want to make sure overtime's not being put in if it's not approved and those sorts of things. So weekly at minimum for that level. But as far as like a reconciliation side, generally monthly is enough.
Okay.
All right, quick break to talk about my book, Construction Genius. This is what I want you to do. Go to Amazon, search for the book, read all of the 5-star reviews, because there's a ton of them. Over 50 to be precise. And the reason I want you to read them is because real people wrote those reviews who've actually read the book. And it'll give you an idea of why you should go and buy a copy right now on Amazon. And here's the deal. If you purchase 10 or more copies for your company, and then send me an email, eric@constructiongenius.com, I'll come in via Zoom and do a 1-hour Q&A and a bonus training session with your team at no charge. I normally charge $4,500 for an hour of my time. And again, for you, I'll do it at no charge if you buy 10 or more copies of my book. And the reason you should buy it is all in the title. It's effective, hands-on, practical, simple, no BS, leadership, strategy, sales, and marketing advice for construction companies. So if you're in the construction industry, this book is for you. So you can get it on Amazon. You can also get it on Audible in the audio version as well, narrated by yours truly. And I know you'll really enjoy it. So go out and get the book. And now back to the interview.
What are the early signs that your field finance alignment is breaking down?
For me, the first sign is a delayed close. So if my people aren't ready to close out the month, that's a first red flag for me.
So not closing out a job, but closing out the numbers from the accounting side.
Yeah.
Yeah. Who usually notices these early warning signs first and why?
It would be the controller, the CFO. Because of that. So if I have a normal close that we're ready on the 20th, 25th of every month to close out the prior month, if my people aren't ready, the next question is why? And then generally the answer is these bills aren't in, the credit card receipts aren't in, I can't reconcile the credit card. Whatever the reason is, it's generally an accounting input side that is the issue. And that's stemming from a different reason, like credit cards not being put in when they should be.
Yeah, so then accounting needs to be generating that report of how far along we are in closing out the month so that then the CEO can see that and take action, let's say on the 10th of the month instead of the 19th of the month or something like that. Is that right?
Yeah. The unfortunate part of that is if the owners and the top isn't really managing that and making sure SOPs are followed, it can create that us versus them situation because accounting's looked out as the bad guy when they're just trying to follow the SOPs and the protocols.
So it's interesting, right? And that's where you find these silos in construction all of the time. And I think what I've seen over the years just working with my clients is that, let's say if your controller has a good relationship with your director of operations and they're on the same page, then that's going to trickle down throughout the entire organization. And so I think it's incumbent upon the CEO to make sure that in each of the different areas of your business, those people at the top of those silos are well connected, because if they're not, then the people below them are not going to be well connected either.
Yeah, absolutely.
So what does healthy alignment look like between operations and accounting?
Good communication, good close cycles. Communication is what I'm always going to go back to.
You think about it in a well-run company. In construction, there's so many places where we can get into chaos, whether it's on the way that we're running our jobs, whether it's on the way that we're dealing with our client relationships. There's so many chaos opportunities that you have to focus a tremendous amount of energy to be able to build the processes and then hold people accountable for executing those processes so that you're minimizing that chaos.
Yeah, consistency is a good thing.
How does that alignment change trust and decision-making, do you think, in an organization?
It definitely builds trust, because if you have good data and good numbers and you can make good decisions, then like I was saying in the last episode, is that you can make better decisions on the jobs you bid and bid tighter. you can be more competitive. You have an upper advantage in making sure that when you estimate a job and you're getting into a job, you have confidence that that 10%, because you normally bid for 15 and things are tight, economy's hard, you need to go down to 10%. You know that 10% isn't going to turn into a negative 5%.
So there's an interesting insight that a CEO can take in terms of communicating the why to the field. Guys, if you want more work, if you want more consistent work, then be consistent in your reporting of your numbers to accounting so that accounting can know what's really going on, so that estimating can bid better, we can win more work, and you guys can get more consistently employed. That's an interesting framework.
Yeah.
Okay, so wrapping up here, let's say I'm the CEO of a construction company. I know everything that we've talked about here today. My house is not in order. What's the first couple of steps I should take in order to get this disconnect between field and office and the reporting and all these kinds of things bridged?
You should be having these regular meetings to talk about your jobs so everybody kind of knows that they're dealing with similar things and they're not alone in a silo, right? So there's that team building of like, hey, these are the issues I'm finding out on jobs. These are the issues I'm finding out on this. Like, it can create a really good environment for knowing that you're all dealing with the same things.
I've got 3 things I just thought about. Number 1, I've got to have that healthy relationship between the top of the silo, between, let's say, my controller and my director of operations. I then need to work on the field understanding the language of accounting as much as possible. Because if I understand, I have a better understanding of the why. And then I have to put in place those SOPs and those processes that people are being held accountable for and consistently executing on those. So it's like healthy relationships, true understanding, and then consistent communication.
Yeah.
It's interesting.
Absolutely.
Excellent. Kathe, remind the audience, I know we've got a couple of episodes, by the way, guys, on the WIP report. I got some great feedback from people. I got some of my clients saying, man, I just shared that with every PM in my organization. So that was tremendous.
Nice.
Remind the audience, Kathe, what you do and how they can get in touch with you, please.
You can get a hold of me on LinkedIn, or kbcpa.biz is my website. And basically, I come in and do controller CFO type stuff for the companies that don't have a controller CFO, or if they kind of need to strengthen and mentor the one that they have, I'm more than happy to do that. Working on processes, all of the stuff to help them get successful.
Terrific. Kathe, I really appreciate you coming on. Look forward to our next episode coming up soon.
I'm looking forward to it. Thanks, Eric.
Awesome.
Hey, thank you for listening to my conversation with Kathe. Make sure you go to the show notes to check out the other 2 episodes on the WIP report. Connect with Kathe on LinkedIn or on her website. Share this with all of your project managers and folks in accounting. Share it throughout your organization with other people who would benefit from the discussion. I'm so excited. I'm stumbling over my words. One last request. Give us a rating and a review wherever you get your podcasts. We'll catch you on the next episode. Thank you for listening to this episode of Construction Genius. Hope you found that 1% of inspiration to help you in the next few days. If you like the show, please give us a 5-star review on iTunes. Share it with other construction leaders who you think would benefit. And always remember that the show is brought to you by Kick-Ass Meetings. I've been working with construction leaders since 2004, teaching them how to run extremely effective problem-solving meetings that gets their people collaborating, taps into their creativity. And to get yourself a free copy of the Kick-Ass Meeting Report, go to www.ericanderton.com/kickassmeetings. Grab yourself that free report, read it, use it in your business. You'll find it extremely useful. And thanks again for listening.